Howdy, welcome back. Today we are going to talk about interest rates and how the changes in interest rates affect your buying power if you're looking at buying a home, or golly, if you have a great interest rate, should you sell? And hey, thanks for coming to my channel. And if you are new to the channel, please subscribe, hit the little button below, and that way you'll get notified when we come up with another real estate or lifestyle topic, which is on a regular basis. I'm always thinking of something, especially when I'm running. Today I've got Mark Liesner with me with Edge Mortgage Lending, and Edge is a really cool company because they're an independent mortgage broker. So very similar rate, yes, like an independent insurance agent.
Right. So just like you shop for the best broker out there when you're looking at homes, you know, you want to shop for the best bank.
I like it.
And so I have multiple lenders, up to 40 lenders that I shop, and so I try to find the best. Not just the best deal, but also the best structure for everybody's situation, because everybody's situation is a little different. You know, some are young homeowners, some are older homeowners, some are buying second homes, all kinds of things. You know, investment properties, everything's structured a little differently based on your individual.
All right, so first things first.
Let's dive right
in. Let's talk about interest rates, and let's drill it down. Let's not do headlines. Let's just drill it down to the basics, touchy-feely.
Right.
Every quarter of a point of interest rate increase.
Yes, or decrease.
Right. I like your positivity. That's the way to go.
Yeah.
Up or down, a quarter point. What does that translate into dollars and cents for someone when they're trying to budget or what they think they can afford?
Per month, more. It's less than what you spend on Starbucks every month. So
no way.
Yeah.
Really?
So you know, $100,000 loan amount. Let's just take round numbers. Is about $14 difference, up or down.
Okay.
So
14.
Yeah.
1 4.
So $45 for a $300,000 loan amount. That's about what you spend at Starbucks at least every month, if not every week. Right.
Yeah, there you go.
So it really, a quarter point is a big move. First of all. But second of all, for your pocketbook, it's not that big of a move.
Okay, just means you have to cut down on your Starbucks.
In my experience, I don't know about you, but in my experience, my budget adjusts according to where prices are. Somehow I always figure out how to pay for it. So anyway, that's another topic. So buying power is affected. You know, if you go from 3% to 6% interest rates, of course your buying power decreases tremendously. Okay,
right.
But we are now at 6%. There's no need to look back. Your buying power is what it is right now, okay? So, but owning a home is very important. It's important to your pocketbook, it's important to your joy in life, et cetera, et cetera. So there's a lot of positives to owning a home, even at a 6% interest rate.
Even at 6%. Just get those keys.
Get the keys.
Get the keys.
Call Bess.
There you go. So let's talk about interest rates in regards to how it affects inventory.
Yes.
How does it affect inventory? What do you see?
It's the $50 million question.
The 50.
Yeah. You know, inventories are affected by a lot of things. You know, it's pretty obvious that they are, just like rates are affected by a lot of different things. I do think that there's going to be a slight increase in inventory, but it's a matter of degrees. We've gone from 2,000 Fahrenheit to 1,700 Fahrenheit.
I would agree.
We're still in the Dallas market, for example, in Dallas County, we're still at 1.1 month inventory. An average market, for those of you that are not experienced in real estate, is 6 to 7 months. So we would have to increase 6 to 7 times where we are today to make up for all the people looking at houses to even get to an average market. So how's this price going to come down? How are prices going to come down when you have that kind of pressure? How are inventories going to rise when you have people wondering, should I buy another house? Should I sell my current house and buy another one at a higher interest rate? Should I keep renting or buying? Which way should I go? So interest rates are going to have somewhat of an effect, but I don't think they're going to make a difference on the inventory. You know, inventory is basically just supply and demand, people coming to town, people leaving town, and people wanting to move inside the neighborhood. But I don't know, real estate-wise, how it's
I would agree. And it's interesting you say that, Mark, because the National Association of Realtors did a study on that exact question, how it does affect. And they found that as interest rates go up, prices actually might slow down.
Correct.
But they don't necessarily dive. They have never historically, over the last 20 years, they have not dove after an interest rate hike.
Not after interest rate hike. You can go back in the calendar, 1996, 2001, 2008. You've had years where the Texas market dropped by maybe 1 percentage point in price, but pretty much it's been a climb up. and up and up.
And I mentioned that just to say, if you're looking at inventory and thinking it's going to go in regards to interest rates and how it's going to affect it, it doesn't sound like it's going to change any different than what the trend currently is, which is what you're saying as well. It's just why? Because essentially people still get divorced, all the D's. They still duplicate, they still get divorced. They have twins when they thought they were just going to have a one and only. We're still human at the end of the day. All right, big question. Big question I'm hearing a lot. You are too, I'm sure. And that is, all right, I own a home now. I really need to move up for whatever reason. Insert reason here. My parents moved in with me. My kids moved back. I had more than one child.
Yeah.
I have multi-generations. But I have a home at 3.5%, or I have a home at a lower interest rate than today's interest rate. Does it make sense to move?
Right. So everybody's different, right? Everybody's situation is a little different, so it kind of depends on your situation. However, generally speaking, if we compare, let's do two comparisons here. Let's compare, you bought a house 2 years ago at $400,000, and you're looking at buying a house today at $650,000. So you're selling one $400,000 with appreciation. You're probably talking $575,000, somewhere around that neighborhood.
$575,000.
So you sell that home, use money to buy the next home, right? Let's look at the first one. You keep owning the first one. You don't buy the new house. You just keep owning and stick with your 3.5% interest rate. Okay. For another 5 years. So now you've owned that home 7 years. Okay. At the end of the day, that amount of money you made after you subtract all the expenses, interest paid, and all that stuff, and you add the appreciation back in that you've gained in the next 5 years, right? At 8% in appreciation rate, which is very fair. Okay. Let's compare it to selling that first house and buying that next $650,000 house, the bigger house, and owning that for 5 years. So at the same time frame, where are you money-wise compared to your first home, buying that more expensive home, okay? Even at 6.25% interest rate, you're gonna be at the same dollar amount after 5 years owning that new house versus keep owning that current house that you have at 3.5% interest rate.
Really?
Because it's exponential, the numbers are exponential, they grow exponentially. So it doesn't always make sense to move, but in many cases it does. Even better so if you use the money in your first home to pay off credit cards or cars and buy a bigger house on top of that. Now your monthly expenses have actually gone down even though you elevated your lifestyle.
You have elevated your lifestyle.
You have bought a bigger home, a nicer home in a nicer neighborhood, and your expenses went down. How can that be?
So you're saying, I'm hearing expenses went, so that means I've got more money in my pocket.
Yes.
As I move to a higher interest rate, but also a more elevated style of living that fits my life at this moment in time.
Let's flip the script to rent versus buy. So let's say you're renting right now for $2,000 a month.
Okay.
And you can afford a $300,000 house.
All right.
What does the math look like there? So you're wasting $1,500 right now a month by renting.
Really?
If you own that $300,000 house, you're going to make $1,500 in your bank. It's a forced savings account that it goes into. And
you're referencing the 8% appreciation.
8% appreciation again on a $300,000 house. And you, through the years, you're going to be making $1,500 a month. Okay?
Wow.
Versus renting.
Or renting, and then you're just giving away $1,500 a month. You're losing a vacation a month.
Yes, by renting.
As you're renting.
So that's in a nutshell. If you're paying $3,000 a month in rent and you have a $500,000 budget for a house, you're wasting $2,500 a month. So it keeps going. So if you're paying a lot in rent, over $2,000, it doesn't make any sense.
Wow. Wow. Thank you. Well, if you'd like that little tidbit, that nugget hit your heart good, I hope. There you go. Hit your pocketbook better. Subscribe below, please, and we'll notify you when we got more words of wisdom from Mark or from all my other buddies that I'd love to share with you. Anyway, thanks for joining us. Thank you, Mark. Bye.